Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and also subscribe to the channel. And also check the links down below for the S&P Emini Futures Trade Zones. $50 for a lifetime subscription. 1 point pays for itself. And then also my Patreon page where you can follow along with my stock option and dividend portfolio. Only $8 a month for that. Again, link down below. But as always, let's jump right into this video. Okay, in this video, this is going to be the final video. So we're going to go over recaps. What's market profile, volume profile, and TPO. Recap value area high and low and point of control, distribution and excess, and then recap VPOX gaps and poor market structure. So let's pull up a chart. Now let's remember, you have market profile, which is a general use term. We then have the TPO and the volume profile, right? Those are your two major names for them, right? Your profiles. So volume profile is volume just at a specific price, right? Like right here, if this was a volume profile, the point of control were the most volume traded, okay? It's only based on volume at a specific price. The TPO is volume and time, how much time and volume both traded there. So these numbers on the volume profile versus a TPO profile will show different levels usually because there's time spent versus just volume, right? Time and price versus just price. So that's the difference between the TPO, the volume profile. Remember, market profile is a general use term that wraps it all together. The next one was value area high and lows in the point of controls, right? So remember, value area high and low is, if we come over here and let's pull up another chart. Okay, value area high is and value area low, the yellow lines, that's where 70% of all the volume has traded. And then the point of control is where the most volume is traded, right? Now, as price goes lower, these lines will readjust because if it goes lower or higher, then there's more volume at specific levels. And if you remember in the prior video where we were talking about the three, look at this. We kind of had excess to the downside, but now what's interesting is we really don't have any excess. So with this being said, I would say the market still has lower to go because there's no clean excess to the downside. All we're doing is we're having a bounce within a downtrend. That's all that is. So that's what is going on there. Let's go to the next thing, recap of distribution in excess, right? Let's go back to this chart. Okay, our 5-day. And remember, excess is just this, right? Where we have excess to the upside, excess to the downside, okay? And then your distribution are these really clean bell-shaped distributions, right? If you kind of put it on its side, it'll look like a bell shape, right? And they're very clean. Distribution, right? And all price is trying to do is it'll retrace, clean all this up. I won't be surprised if we come down and start to clean this up a little bit and create a little bit of a distribution, or maybe over throughout the day this might become a very big distribution where price just chops here for a while and then we have no excess and then it falls, right? So that's kind of what excess is. Here's another excess, right? Usually the end of an auction where people are getting either long or short at the wrong time. That's what excess is in a nutshell too. And so that's it. And then finally, let's look at, let's clean all these, and we're going to go over the VPOCs and all that, right? So let's go volume. So our final thing we're going to go over, the recap, is our VPOCs, right? Virgin points of control, a value area high, a point of control that has not been touched during regular trading hours yet. That is what a VPOC is. And then you have your open gaps. You want to do this every morning, keep a running total. And once it's been touched, you just delete it off your chart. So tomorrow, if we closed here and we gapped higher, I would probably duplicate this, bring a VPOC down here, bring the gap here. Now I have a reference. And then market structure overall, you could look at, okay, what's going on down below or above the market? Is it good or poor market structure? When you see a lot of lines, a lot of gaps in VPOCs, that is poor market structure and not a very good thing. So that for the market to keep rising in a poor market structure. Now, with that being said, what will happen a lot of times is you'll see a big swoosh and it'll take all these people out within probably a couple days or something, and then really clean up the market structure. And that takes out, it kind of gives it room to make the next leg higher. So that's it for this video course. Thank you for watching on Market Profile. I hope this has been really helpful for you guys, and we will talk to you soon on the next one.